Wells only and his guests are not responsible for any losses you may accrue for having weak hands. Where the haters at? Y'all bitches still ain't showed up. And now, right, we got Hex. Flawless uptime. People thought this was a joke. Now they're mad at the chart. It's lullaby music, really, right?
This is Wales Only. Glad you guys can make it out. I'm making some claims that are pretty outlandish, but I can back them up. Boom. End of story. There is no other crypto out there, so don't get it twisted. If you don't understand where you're parking your money, you're going to pay the consequences for that, and that's just how the cookie crumbles. Boom. We're obliterating everybody. Literally. There is nobody else that comes close to what Hex has done. Boom. Oh, it's about to get funky. Funkier than you could have ever imagined. You know, Richard Hart is a boss. Hex is literally the best thing on the planet. It's simple mathematics. What's good, fam? Happy Wednesday to y'all. And if somebody wrote in the chat ever so eloquently, it's Wednesday with Wells Only. And man, are they making it an interesting Wednesday? You know, very rare is a day where stocks and bonds go down together in a way where like everybody's wrong. And not really with bonds because everybody's kind of short that. But sentiment was definitely shifted towards rate cuts and stuff like that. And recently, all of that has changed materially. And that's important to understand because it really does impact how money flows. And that's what it's all about. Right? We talked about this before, and we'll talk about it again today. And if you guys kind of understand what the catalyst was for all of this craziness that's happening today, it was the CPI data, right? And that's like a artificial measure of inflation that the government massages to their best of their ability, such that they try to give a subdued reading, as subdued as possible. And the reading that was released today was anything but subdued. Let me see if I can. I don't think they got the. Oh, here it is. Let's see. Today, Wednesday. Yeah. So the rate was expected to be 3.4%, and the prior was 3.2%. And year over year, it actually ended up being 3.5%, which is above what was expected. And the reason it became such a thing, in a matter of seconds, and I'm going to show you guys that people knew before the data was released, because you can always see it in the charts. And this is why you have to be thinking ahead. People think that, well, I'll get to it when I show you guys the print, right? Because there ain't no point in talking nonsense with it when you can't see what I'm talking about. So, but long story short, inflation runs hot. Nobody really understands inflation. And what I mean by that is, when you look at, and let me just share my screen. When you look at like what people are expecting and looking towards and hoping for and positioning themselves in the market about, that stuff matters. That stuff matters. So if you look at the right side of my screen, CPI was released today, Eastern at Eastern time zone, 8:30 a.m. And the forecast is this middle column. The prior is the right column, right where my cursor is now. The prior was 3.2%. The forecast was 3.4, which is above the 3.2. But what happened is we came in even higher than the forecast. So that's a miss, right? And the thing is that expectations were that inflation was receding, and it turns out it's not, right? And on a month over month basis, it's also still pretty sticky. And that's the thing about inflation. Give me a second, guys. Anyway, and that's the thing about inflation. Once it gets triggered, like what happened in September, it just gets sticky. It doesn't really disappear. That disappearance that we saw at the end of the year in 2023 was merely just a recoil for the actual event, because it's extremely similar to how volatility operates. These things, they stack up. They don't just come and go. Once they get ignited, that is it. There's no tucking that genie back in the bottle, so to speak. And people, they just don't. And by people, I mean people that focus on markets, not normies, right? Normies aren't relevant here. But that inflation, right? That the narrative behind it, and what it does, and the impact it has on the markets and stuff like that. That's not really well understood by people. We're 50 years from that point in time where this type of stuff was actually happening. This is stuff that happened in the 70s, like almost verbatim. We're going through the same stuff that's happening in the 70s, and this is how I'm able to understand somewhat what's happening, and forecast a lot of what's occurred and going to occur. Uh, and what we have here is this that spread I'm always talking about, the 2 year minus the Fed fund, and 2 year U.S. yield is essentially a leading indicator for where the Fed should be, and that's why it's spread against the actual federal funds. So the idea is that the spread determines how many cuts behind or ahead the Fed is. And in this instance, the expectations for the Fed are 2 cuts. That means 50 basis points. And as you guys can see here, that number is 37 and a half, which is basically 1.5 cuts. So the market is saying right now that the Fed is too dovish. And what that means is that they're too focused on the wrong things, according to what the market is saying. Because the market is saying, rein in those expectations for inflation to go down, rein in those expectations for the cost of capital to go down. They're gonna stay up. That's what that's saying. And that reverberates throughout the economy in many different ways. And it's not something that's very apparent to people that participate, but as we will soon come to see, that is, well, look at that. Would you have guessed that they look the same? And odds are that your answer would have been no. But that's what we get. The exact same view in the dollar as you get from the Fed funds. I mean, how interesting is that? Let me it's already here. Outstanding. So, folks, I mean, I could probably write a paper on this. But these are things that people just don't look at it. They don't look at it. They don't even try to find these relationships to their detriment because it's real. It is real. Um and there's nothing that's going to change that. Money moves as a function of its cost. Everything moves as a function of its cost, right? So these are things that are important to understand. Very important to understand. There's no days off from what the markets are doing with respect to where they're going to go. And they're always giving you signs, always trying to tell you something. And this spread is a great indicator of what is to come because the market always knows. Market has no reason to pretend. That's what people are for. So when you learn to watch the market, you learn to make the right calls and expect the right things to happen and position yourself for that, right? Because that's ultimately what it's about. Uh, let's look at the manipulated cryptos real quick just to see what they're doing because I don't even look at this stuff. So you guys see dollars up, crazy, but this has been going up too. ETH and Bitcoin have been going up too. But question is, are they going to continue to go up? Because from the way it looks to me, it looks like that's a no. But that's as of now. That could change. Um, that could change. Let's see here. Looks all right for now. But if the dollar decides to impose its will on the world for reasons really that can't be understood, just like we saw in 2021, 2022, same thing will happen again. Crypto will suffer. But it's all a function of why. What's the context? Why are people buying dollars? Why is the market tracking that down as if it's necessary? All right, because this is what we see. We're literally seeing the market say yay to dollars and nay to risk. If you look at any stock market today, they're down. This is the mid caps. This is the S&P 500. This is Nasdaq. This is small caps. So I think even China's down today, right? And these people are basically getting ready for a bull market over there. We talked about this market before, and nothing's changed from that perspective. Well, actually, Taiwan. Let's look at Taiwan. Taiwan is even catching some heat, right? So all these things add up. They add up. Now, when you look at bonds, it's gonna be the inverse of the dollar for now. And today has been this is what 2 point day. So if you got short one contract at the right time, ooh, mm, mm, mm. Man, that's 2 racks, man. And that was actually right before, an hour before. Amazing. So you didn't really have any risk at all today with this trade if you took it an hour before. That's crazy. And it keeps going. I love it when the market does that. Crazy. Over 2 Gs just in one market. And people just, I don't know, man. I just don't know what to say about people that spend their time fucking around in fake crypto. I don't know. I can't. I can't even comment on it. But good luck to them. So much more money out here to be made. Hey, to each their own. Chocolate still ripping. Milk is like teetering. It's like nobody's buying milk. I don't understand what they're doing there. Feeder cattle, whatever. Cost of feeding animals. Lean hogs. Hogs is ripping. We talked about this last time. Talked about this coming, and it's here. So, bacon about to go up in price. Coffee, I think it's still chopping around up here, so it's probably going to continue to move higher. This is live cattle. Beef giving us a pullback. For those that eat beef. Um, yeah, when you look at commodities like these, cotton, OJ, cocoa, beans, uh, they're they're gonna they're gonna rip. The thing with sugar that a lot of people don't know is that sugar is very federally subsidized. So, in all reality, this market price that you see is really always too high. So, you got to play with a lot of volatility for that. But the trend is probably not over because it's still a commodity that people buy and it's priced against dollars. So, the only ones that really just seem to be in a never ending bear market and we're looking at 13 days per candle now, are those like corn, oil, or excuse me, oats, soybean meal, and then soybeans, and then wheat. Like those five are like in a never ending permanent bear market of sorts. Okay, maybe not bean meal for whatever reason, and probably not soybeans too. But everything else, yeah, yeah. And this 2020 stuff, that was just the lockdown and prices being shoved up based on fear and stuff, and that clearly ended quickly. But all in all, today the VIX is up 5%, and it's interesting because when you look at credit markets and what they're looking at, you would really expect a bigger move in the VIX. Um, and what I mean is that I think the VIX is wrong, and that's funny to say because, and I think I know why. But the thing about it is, a lot of the market prices it's risk based on volatility, right? So if you have all of these arenas of the market that are underpricing risk, give me a second, guys. Anyway, if you have a nexus of the market that is pricing other areas and it's not properly priced, then those other areas are not properly priced, and that's really the risk here. Imagine somebody buying a vol targeted fund. I mean, those things exist. And, in all reality, people don't understand what they're doing even when they try to target vol. I mean, you can't really do that. It's dumb. But, once people blow up and they realize the error in their math, that's when they get it. Because it just sounds good in theory. But in practice, all it takes is one instance to wipe your ass out. That's it, just one time. And you could have been winning for 10 years. And that one time where you went against the math just murders you. And it's like you didn't do anything for 10 years. And that's what happens with a lot of hedge funds. There's a lot of businesses that revolve around the suppression of risk. And what do I mean, the suppression of risk? Well, let's think about it. If human beings are cyclical and everything we do are cyclical, everything we touch is cyclical, hell, even our hearts are cyclical, right? Everything. How can you say there is never any risk in the market? I mean, if you look out for the past 15 years, even longer, 35, that's essentially what's happened, barring a few periods of time. Now, that doesn't make any sense, but yet that's what's true. Now, this is a huge picture view. Now, when you take this slice of data and incorporate it with the 100 plus years of information that we know about the S&P, the Dow, whatever, just American equity markets, it's actually 200 plus years, but neither here nor there. The point is as follows. We're talking about a metric that clearly highlights market manipulation. you know, plain and simple. Plain and fucking simple. And it's mathematically derived because guess what? There's been nothing but evidence to show how the printing presses augment and support the price action that we see. And not only that, they have powers to oppress things like gold, silver, even copper if they need to. They'll do what they have to do. They there's plenty of times where governments, and this is one of the many complaints of people when it comes to currencies, is how governments can just step in and do whatever they want, which is interesting because people don't realize that that's the same thing in every market. It's literally not unique to currencies. And the funny thing about that is that when you think about it even further and you come to understand how markets actually work, every time you're buying a good and service, what are you doing? You're paying for that good or service with currency. So everybody's a currency trader, whether they realize it or not. Everybody's a trader of some sort, whether they realize it or not. They just don't realize it because they don't phrase it or frame it in that way when they think about it. But at the end of the day, we're all trading something for something at all moments of the day, whether it's time and action or time and nothing, just being a lazy fuck, right? But we're all picking a trade, and it's really that simple. There's no debating that. That's simply what it's going. You can call it whatever you want. I'm gonna call it you're trading something for something. Period. Because that's what it ends up being. That's why it's called priority. What are your priorities? Playing yourself all day or stepping it up? A lot of motherfuckers love to play themselves all day. I can't fuck with that. Yesterday I went out on a run. Wasn't even trying to fucking run long. Ended up doing damn near 10 miles just cuz. Like sometimes you're just gonna do some shit just because you're gonna fucking do it. It's not to brag. It's not because it matters. Because who gives a fuck? I run 10 miles any fucking day of the week. It's just I did not set out to do that. That's the thought process. Hell, it was so much so that my pace was even shitty. I just didn't really feel like running, but I ran anyway, and I still pumped out 10 miles. That's the type of attitude that people need to have. Just fucking get it done, man. Who gives a shit? You got to do it. What the fuck else is there to do? You're alive. What else you got to do? And that's the thing. People don't have that frame of mind that they need to have, whereby they realize that they need to just focus on this one thing and get that one thing done. They just spend their days finding excuses. For a long time, I would just short this market. I mean, look at this shit. This is 34 days per candle. and look at the little bit of candles that are red versus those that are not. And I spent so many years shorting the market because I understood the economy was falling apart. I knew better. No, you don't know shit. And people have a hard time hearing that or respecting that or even thinking about what that means. The best lesson you can get in the world is from participating in capital markets because the markets don't give a fuck. It's just people clicking buy and sell. And they are clicking buy and sell for a reason you don't actually know. And that's the best part about it. You can't really figure it out. You think you can, but you can't. Because all the real reasons you're too lazy to figure it out. Who understands that markets are determinants of capital? It's not the other way around. People think that markets determine where capital goes. No, capital determines what happened with markets. Period. That's why if you can't see it, you ain't participating in it. I've been talking about the market doing this for a couple weeks already. And here we are. All the function of the dollar. And it's just about understanding how these things build up over time. It's not about anything else. Because markets are always going to exist and do what they're going to do. Right? They're never going to not. And that is difficult for some people to wrap their head around. I mean, look at that chart. I shorted like at this. I was short. Like, I crushed the market here. Like during this period of time, I crushed it because I was in tune with what was going on. And I lost. The market just kept doing that.
YouTube Premium
That.
is ad-free YouTube
And there's so
and
many people who get
ad-free
caught up
videos
in
on
that
the YouTube.
because they don't realize the market is talking to them. They're too busy not paying attention. It took me about 3, 4 years before I realized what I was doing wrong because I just wasn't paying attention. I was literally giving my money away, blowing up account after account after account after account. Because, and of course, luckily it wasn't with tons of money, but point still stands. It's what you do, and that's not the goal, but it's what ends up happening. And this is how people spend years just pissing away time, not realizing what they're doing. I mean, at this point, the probability that we're locking in that negative divergence is so high right now. Look at that chart. I mean, let's go to the goodies. Let me just pull one of these bad boys up. Boom, boom, boom. All right. Now, as I've explained before, this indicator down here is not like a regular RSI. It's something that I basically made. I just created a formula, and the formula I wanted to see certain things when I was creating it. And long story short, if just like you guys can see here, let me try to get a where is this? Yeah, here we go. Let me see if this will work. Just like you can see, like this area down here, right? How it lines up. It lines up with that, right? These two areas line up, and then ultimately it led to a down move. And I'm expecting the same thing here. Except for that, it really started all the way back here this time. Because once you have that up thrust and that dip, everything after that is the beginning of the divergence, right? And this is what you see here: that up thrust, that dip, and then finally that last move to take you to that new high, and then the weakness really starts setting in, and then roll over. So I'm expecting something like that in this instance here, um, because we talked about this for a while. What did we see from the markets? We saw the dollar getting accumulated. That's what we saw, right? We saw that, but without a problem. This is obvious, and this is what we saw from the beginning of the year to today, right? And now the dollar market, seems to be entering a place where it could potentially run all the way up to this point, a buck 12, because that's really how markets move. They move from one point of liquidity to another. Let's see something here. And they make pit stops along the way, of course. And this is clearly probably the first pit stop, 106.3 after this 105 move. Let's see. Let's see. Yeah, it looks like it's straight up after 106. Maybe a pause at 109. And basically, I'm basing this off these little peaks in the distribution that we're getting on the profile on the right side of the chart here. Let me just get the price action out the way. And as you guys can see, the point of control on the chart is from where the market is breaking out. And everything around it was opportunity to get in and get out. So that's a way to understand how to view. If you don't use a market profile or a volume profile, I suggest that you get involved with that. It's a great tool to learn how markets actually move, and you can stop living a lie. Very important. Very important. Um, yeah. So no matter how far back we go, we're on a daily chart. Let's go to 34 days. Just want to see something. So this was support already. So you guys see, so this dashed line on my chart, this dashed line, this dashed line is all of the heavy price action that occurred across time. So it helps me identify areas of support and resistance. I just forgot about it and haven't been using it like that, but here we are. And it's a great tool, obviously, because it works, as you guys can see. You just got to really understand how to use it. So, like there, right? Like it's obvious when it lines up with many price points, right? Like it just did a minute ago, and it's just about finding it back if you want to, but you already saw it, right? That's not going to change. So an area is what it is, right? Because it's all really dependent on what is being shown on this right side here. But at any rate, this is essentially all time on this chart, all this data, this profile. So what this distribution shows is that below 97 had a lot of selling, right? Because that's what it was for 20, 30 years. Always getting the dollar down. It was always about getting the dollar down. And 2008 was the hump that broke the camel's back. And there is no coming back from that. They can paint the pictures all they want, make all the mosaics they want to act like they have. But the fact that all the banks that caused the crisis exist, or the fact that all the entities, all the players that ignited this and caused this are still alive and well and are able to act like they didn't do anything. That's why this is happening now. And the thing is as follows. It's all mental manipulation. You know, what are we talking about? We're talking about markets. Why are we talking about markets? Well, we're talking about markets because we want to figure out how to extract more what? Fake units of account. And by fake, I mean monopoly money in the sense that we know these motherfuckers spend their time printing that shit, unit of account after unit of account, and we don't do anything to help ourselves. And I mean realistically, fuck playing around with crypto. I mean realistically. Society has no interest. And I don't mean the corporate entity. The corporate function of our society is not who I'm referring to. If you're waiting on fucking Nike and Amazon to take fucking crypto, well, you're fucked because they have zero interest or need or desire to do so until somebody like BlackRock or whoever the fuck else tells them to do that. And that's the problem with this current crypto crowd. They're a bunch of knee pad wearing motherfuckers. If they literally don't think like a cypherpunk, they're not about crypto. And I'm not the example, but me and RH are pretty fucking close to it. If you're not in that realm, you're just doing fake shit. We've been talking about the banking crisis. We've been talking about all these things. And this whole time, this has been happening in people's face. And nobody really grasps what's going on. It's very all blase, right? Everybody's got it figured out. They think they're just going to become a millionaire with units of currency that are worth zero. And that's the problem. People don't understand that you can have a trillion pieces of paper that are worth zero. Ask motherfuckers in Africa about that one. We talked about Zimbabwe last time I streamed on Sunday. Man, do we gotta go there? And let's see if I can pull up a chart. Yeah, I didn't think so. I'm sure we can Google one. Yeah, this is probably nothing I can pull up because there's not going to be any live data, but I was hoping maybe pull up something historical at least. But nope. Idea is you guys got to understand what's really valuable. What's valuable really in the 21st century is information. Currency is not valuable. If you don't know how to survive when all these conveniences are no longer operational, then what good are you at anything? I might not be a farmer, but I pretty much have an idea how to grow food. So I'm all right if shit hits the fan from that perspective. But there's a lot of other things that I'm not well versed in or even versed in the first place. Hold on, because these motherfuckers is just having a goddamn party today. All right, that's enough. So yeah, it's really about understanding value, guys, and respecting what value is. Let's talk about Pokemon cards and Beanie Babies and shit. You know, it sounds trite, it sounds trivial, and rightfully so. But those are classic examples of understanding value is relative. A damn chair could be worth $1 million if it's the right chair. And I don't think people really get that. And in that kind of understanding, it took me even a while to get to appreciating, it's kind of out there. It's on the fringe, really. But if you don't get there, you're gonna miss a lot of opportunities. I didn't collect any Pokemon cards. I didn't do none of that stuff that I was around for because I thought it was a joke. I didn't understand. I mean, I was a kid, right? So I got an excuse, but still, looking back at it, I had the opportunity. If I was smarter and more thoughtful, and not just a punk, teenager, would have been a different story. But every teenager is a punk, so what are you gonna do? But at the end of the day, the idea is as follows: we see these points of control being highlighted on this chart, right? And the market keeps trading around them and progressing higher. The next one that we have on this chart, 106.89, which is very small. Then 107 half 0.6, then 108, and then after that, we're gonna just be in a new territory, and odds are we're not gonna come back down from that area. That's what I'm thinking we're gonna see. That's what I think is gonna happen. The question that you have to ask yourselves are, what are the impacts? What are the reverberating effects of this price action? Because there will be reverberating effects. You better fucking believe it. I mean, let me just try to think of the best example possible so that you guys can really grasp the severity of what's about to occur. And that's the funny thing about, you would think with where prices have been and where they have gone that that's enough. But as I've been telling you guys for years, this party's just getting started. Um, and unfortunately, it's coming to our doorstep whether we want it or not. So, once we get above this 108 area, we're really not gonna get below it anytime soon, if ever again. And the reason for that is because why? In the entire existence of the dollar, let's see if we can pull up a version that gives us more data. Let me see. Ah, yes. But we probably get no profile. Yeah, we're not gonna get a profile because this is really just paper. This isn't transactional data. So this is going back to 1967. Let me see if I can find a data point that goes further back. I just really want to I don't think I will. But let us try. Nope. All right. We'll go with this one. Whatever. And here we're going all the way back to January 1967. Relative to January 1967, we're still way below where we should be. Isn't that interesting? Isn't that interesting? That 70, what is this, 2024, 60 years later, damn near, we're apparently 12.5% below nominally where the dollar was during what can be considered pretty much the takeoff of Vietnam War. If not, we're just in the thick of it at that point. And if you guys know your history, well, you know that by the time 1968, 1969 came around, they could no longer afford to do what they were doing. So they had to figure out devise a way to get the power back in control with respect to spending and the spending power and being able to keep the war going. The Vietnam War, I think, went on until 1975, if I remember correctly. It went on for years. It was at least a 10-year war. And the only reason it lasted that long is because they were able to pull off the biggest heist ever, and that was the elimination of the gold standard, right? And that was August 15th, 1971. And look what was already happening prior to that point in time, beginning in August 1969. 2 years to the day. People knew. Anybody that was paying attention could see the writing on the wall, and if they had access to sell dollars, well, they did, and they made a killing all the way through 1973, right? And I think at this point we're already talking about all types of economic issues that impact the U.S. in a pretty crazy way, to the point that we reached what? Let me look it up. Oil embargo, 1973, right? What happened in the 80s? I can't remember. There was another oil crisis in 79, and that's what it was. That's what this is. This. I've talked about this, yeah. So this oil crisis is this one was a function of all the stuff that had been happening in Iran up until that point. And this isn't really like the official, story, right? But this is the true story. Yeah, Iran Contra is really what led to this, and this is when the Plaza Accord came into play, where Japan came in and assisted the U.S. and not just Japan, but Japan was a big player. Germany, and I can't remember what other country was a big player in helping the U.S. solidify their ability to just continuously pressure the dollar downward, right? And that's what we're seeing here. Because when you're looking at this 5-year, 6-year period of time, what did the dollar do? I mean, that's max pain for the government. Think about the years 1980 through 85. What was happening? How was it happening? Etc. etc. Like, this is how you realize what was going on and what it really meant at that time. Not just the narratives. Narratives are forever, and they're forever changing. So you can't really lean on that, right? So as we stare across the broad spectrum of price action in the dollar, right? What I'm trying to highlight is, once we get past this hump, we're once we get past this point right here, we're pretty much going to be in this lower half for the foreseeable future. And the pain point is going to come after above 112. That's when things are 113, and that's when things are going to really be I don't know, folks. I don't know what to make of it, but I try to remain positive and steadfast, but I don't know how people are going to react to realizing that America is in fact a third world country, and that everything they thought was a lie, and it happened because they let it. I mean, we live in a society where your ability to survive is not really dependent on who you are as a person, not even really your skill set. It's really determined by a piece of paper and how well you can play some fucking game. It's not really based on your ability, because when you think about people that are employed and have jobs, many people are incompetent and they're employed. So clearly, competency isn't a core function of the matter. All right, it's not really relevant at all, apparently. And those are things that are very crucial in understanding as you try to get through life, because you know the game doesn't stop. You got to keep playing it, right? And those are things that, as we like to say, nobody cares. You got to care. You know what I'm saying? Like, you got to care. Nobody can care for you. And that is tough for people to really respect. You got to respect yourself. And all of that is to say that because we have not, as a society, focused on respecting ourselves, We're now about to go through some pretty dire economic shit because at the end of the day, this is not going to stop. This might continue. This might continue. But this not going to stop. And this is really the thing that's going to put pain in everybody's pocket. It's not what politicians tell you. It's not what your boss tells you. None of that shit matters. What matters is what is happening to this damn dollar and what are they doing with that fucking printing press that you don't have control over. And then the one you do have control over, what do people do? They shit on it. So you got to ask yourself, for those people that are not RH Maxis, you really, really got to be careful with those people because why are they so adamant about you not having the power to print your own money? You really got to ask yourself that question because that's the crux of the issue here. The crux of the issue here. That is the issue at hand, and it has been the issue since the beginning of time. This is why I don't need to converse with other people that are pretending to be crypto whatever. This ain't about crypto. All of that shit is irrelevant. This is about everything. Crypto is just a simple battle on the battlefield in this never-ending war. Crypto is how I was able to get the word out to the masses because people aren't fucking listening otherwise. They're not. I remember one time somebody at work told me about a goddamn personalized Spotify list. I looked at them and was straight up like, I don't let Spotify track shit I do. And kept it moving. Like, the motherfucker looked at me like I was crazy. And, these are the people that are supposedly the future. They're not the fucking future. Because motherfuckers like me ain't gonna let them do shit. And those are the people that got the death jabs too. So, they're all on the clock anyway. And the best part is that they really don't know it. And of course, you're going to have those onesies and twosies that got lucky and got the placebos. But don't you worry. They have another trick up their sleeve for those fools. So don't you worry about that. There will be another chance where they can walk off the cliff and then not fail. You know what I'm saying? Like, that shit's going to happen. So, you don't get too stressed about that. We will inherit the earth. Better believe it. Because there's no alternative to that. Look at how things play out. Look at how they pan out. When you really think about what's happening here, it really is that Squid Game. And we're out in that field. And some of us know how to read the machine gun. A lot of us don't. That's why only a few of us are going to make it to the other side of that one. And that's what life is for us right now. I mean, look at what they're doing. Blowing up bridges. And they tried to do it over here. They tried to block the New York Harbor last week. They couldn't get away with it for whatever reason. Porn is free. Straight up free 99. And unless you dig into it, you don't really realize the damage that does. You think it's a fucking hack or some shit. But nah, it's free for a reason. All the music is fucking trash, pretty much. All the music that's promoted, i.e. commercial music, all of it is trash. Let's see, what else do they do? All the food is trash. Water is poisoned in multiple ways, not even just the fluoride. The fluoride really is just the base case. What about everything else that they dump in that shit? Plus all the shit that they're doing in the sky that you can't even account for because your ass ain't up there looking at them. But they're doing shit. I mean, look at the Middle East. These motherfuckers out there having floods and shit because they don't know what the fuck they're doing. How you having a flood in Dubai and Saudi Arabia? Floods. Look at where the dollar's at. That's why. That's how. I'm telling you guys, your lack of respect for your pocket is exactly why we're here today. You got people swindling you and robbing you to your face, and they're not even shy about it. They don't give a fuck. They tell you. And because we collectively just let it slide, it don't matter. And this is where we are. This was that point where it should have been stopped. And people should have fucking revolted and all of that, and it didn't happen. And that's why everything is going down how it's going down, and it's going to continue to go down how it's going to go down. And what are you going to do about it? Not much we can really do at this point, but prepare ourselves personally, because that's what it's going to become. You think crypto ain't a solo sport. Well, you're about to fucking find out what a solo sport really is when you got to be out there surviving by your goddamn self, because you can't depend on nobody, because it's really on some The Walking Dead shit where you can't trust a motherfucker because he's just trying to rob you for what you got. People don't know anything about that life. I grew up in that kind of environment, so good luck to you, because that is what's coming. And it seems so far away, but I promise you it's not. Because right now, at this point in time, what do we see? Massive layoffs, month over month. The number only gets bigger. And you don't see all of them. And here's the thing. If cash ain't moving, people aren't eating. Cash is a determinant of a successful economy, not money. Right? This is why they have different versions of money that they track. Right? They have the M1, the M2, M3. They have all these different ways of tracking the quantity of money, quote unquote. And guess what? They've been tracking it all this time. And you would think that with all the money that's been printed, that chart would be inverted. But right, this chart should really look like that with all the printing that's been going on. That's what the fuck it should look like. But it can't. It can't look like that. Why? Because everybody's asleep at the fucking wheel. That's why. This would be a normal mathematical, a logical mathematical occurrence. This is what should be happening. But it is not what's happening because motherfuckers ain't paying attention. They're too busy worrying about what the fuck is going on in the NFL, MLB, NBA. I don't fucking know. They coochie? I don't know. I don't know what dudes is worried about, but they worried about the wrong. I don't even interact with dudes on a regular basis. I don't fucking know. I don't care. Because them the motherfuckers that ain't gonna make it. Them the motherfuckers that's just gonna get blindsided. Something crazy. And it still happen to me. I'm not crazy about that. Because even though I'm kicking facts, I can get swept up in some natural shit too. Right? Like, you can't control none of that. But you got to be alert to it. Because how else can you prepare or be even cognizant of what could be? Right? I mean, guys, look at these markets. All of 2023, right? Basically, all of 2023 into 2024, straight up. Now, I for one can say my life has improved to in that same fashion, but can you? Can you? Can you see the general public? Has the general public's lives improved to that fashion? And the answer is really no. In general, things have not improved. What's happened is that you're still being robbed. You still got jokers pretending to be in charge. You got the fucking quote unquote adults pretending that they're fucking playing, that they're really adults when they're not. I mean, yo, fuck out of here. No, you don't matter. There's gonna come a point in time when these people are gonna have to sit the fuck down and get out of the way, whether they want to or not. And it's gonna hurt, but it's gonna happen. Because it has to. You can't realistically think things are going to continue as they are because there is no continuation in negativity. It's like volatility. It has to stop. Volatility, excuse me, positivity and negativity do not move the same. You know, um, life events, how do they happen? Think about that. How do good things happen? How do bad things happen? When you realize it's like a web, our lives are like a webbed weave based on the decisions that we make day in, day out. So ultimately, there are second and third and fourth and fifth and, you know, nth order effects based on the decisions that we make. Those decisions that we make end up being the drivers for the positivity or negativity that we experience. How we react to that is really a function of our intent and desire to be productive or add value to whatever scenario we're going through. Silver, look at this. We was talking about this shit back here. This is 5,000 per candle or per dollar. So if it went from 22, 23 to 28, that's 5 times 5, that's 25. 25 racks, one contract. Y'all keep playing with fake crypto. Let me know how that works out for you. Money's just being given away out here. So when we look at this market, let's break it down. Let's go all the way out. Now, right now, we're looking at the E-mini S&P 500 futures market. Let me just get rid of all that because I can always pull it up later just to give you guys a clean chart. And all these lines are just points of control that I have identified that the market has not reverted to or cleared out, aka an unresolved auction. So, long story short, the market at some point in the future would have to come back and clear those out. And you better believe, there's going to be tons of them going all the way down, right? But the market will get there when it gets there. Those are just levels that are good to be able to identify as reversal points. That's why points of control are important to understand. The markets trade from one point of control to the other. That's the truth behind markets and how they move. So anyways, when we go to the charts, it's pretty obvious we got a negative divergence coming into play here. The thing to understand about negative divergences is that they take time to materialize, right? So while we're just in the beginning of this next downstroke, right, we should see. Let's see, is it here? Nope. I guess. Yeah, we should see the momentum, this indicator at the bottom, make a move similar to this, where you get a move lower and then a retrace move, of course. And guys, this is really how you plan out a trade, right? You got to really have an idea of what your expectations are as the market is doing A, B, C, D, whatever. And you got to have that as concrete as possible in your head. And if the market does something different, you exit. That's technical analysis. It ain't nothing else. Everything else is bullshit. If anybody's telling you anything else. So yeah, down, up, down. That's pretty much how things move, right? So in the same vein, right, you expect the market to do probably something like this, something like that, because the market typically retraces to the starting sell-off point, and this is there'll probably be some area in here we can identify in the near term, and then a move lower. right? Probably to the next area of support, maybe here if we do have a crash scenario play out, such that we do get that 35% retracement from the peak. Let's see, what's 35% at? 35% is the average worst case scenario for a quote unquote bear market, and there you go, 3,400. So if this scenario does play out, that's basically what you can expect, assuming we get a worst case bear market scenario. Because again, what's the idea? The idea is that the guys that pull the levers pretend that everything is okay until the last possible second, so then they can say we warned you and you ain't listen. That's why they've been okay with being wrong. They've been doing things that they just don't do that are not par for the course. And that's important to understand because these are the telltale signs that, when you think about the phrase is what you don't know that gets you, that's it right there because you didn't see it coming because you thought it was all good. And don't get me wrong, on this leg, it'll of course be ups and downs, but I wasn't going to spend my whole time, doing that. So that's exactly pretty much what I expect to happen. But we'll see, man. We will see. The dollar is going to continue running because it has to. It's mathematically broken. So with rates doing what they're doing, which is going higher, as you can see here on this chart, I can get rid of this channel, put that thing back later. Everything is the same. Everything is related or not. At one point, I was expecting positive divergence, right? And guess what? All that changed because the trend didn't. The preceding trend, everything else that was tied into that expectation didn't bake out, didn't shake out. So the assessment had to change, right? And the market is still basically bleeding out to the point where we're going to really, really see what happens 10 points lower, 9 points lower, because we're at 115 right now. And we got to fill in those imbalances that are down here. We're like, that's just how the markets operate. Because if we're not going to go up, then we're going to go down. It's pretty straightforward. It doesn't seem like it, right? Because we're looking at 55 days. But once you zoom in, what's happening? There's a whole lot of stuff happening here. We're reaching some type of inflection point in the market. Maybe options players are going to come in here, step in here because they got calls that they sold that is getting a little risky for them to be holding bad boys. Right? Because what's today? Oh, it's still early in the month too? Yep. Yeah, so it's going to get dicey. We're going to see what happens because this is an interesting area for the market right here. If it speeds up, then that says something. If it slows down, that also says something. But it's about understanding the who, what, when, where, why. Right? Because the last time the market was here, a major bull market started that lasted 6 years. So, those are things you got to understand. There's context behind everything. Right? And markets are always doing what they do because people are always doing things that you might not be aware of based on reasons you might not be aware of either. And let's see what we can get from this. And it seems like it's not giving me anything up here. What's up with that? Sure is not. Huh, weird. Whatever. We'll pick it up on a smaller time frame. But you guys get the idea. Just finding points of control that the market will latch onto. So as we talked about earlier, 90 looked like a good area, and I like it better than 80. Definitely like it better than 75. So we'll see what the market does. We'll keep an eye on it. Right now, 110, 109 is the obvious barrier lower, right? And this is going to coincide with like 5%, 5% rates and stuff like that. And this is, we're talking about the 30-year. 5.25 was the high. So imagine, imagine the market go all the way back up there when people thought that it was over, but nah, it really is just beginning. And as we look at these rates, let's actually go look at them from a momentum perspective. We're not going to have any activity on the side or anything like that, but we're just going to look at it plainly. What do we have here? We have momentum at one level here, then momentum at another elevation being built here. And the prices are going the opposite direction. I'm sorry, the values are going the opposite direction. And that's what's called a hidden divergence. And those are actually stronger than the outright ones. Sad to say. So in essence, we're about to get a huge move to the upside. We could very easily just get past this 5% level and just coast on to 5.5, because the market average is 4.5 all time. So we're just getting back to normal after being at zero forever. And now people are going to pay the price in ways they couldn't imagine. I mean, what's required for this not to happen? Let's think about that. What's the opposite scenario that could play out and completely tip the interest rate scale on its head? It's a couple things, because it has to be a couple things. And the first thing is going to be the market's appreciation for CPI and where it is, meaning the CPI is reduced its high readings. Like the CPI would have to come in less than 3 for a few, readings, preferably a whole quarter. I mean, that would definitely flip the switch. If a whole quarter of CPI readings came in less than 3%, and then it showed slowing down inflation, meaning a decreasing rate of change in that number, lower, like that would be great for the market to take that as a tune, as a note to reverse, right? But as of now, there's really nothing like that besides all of the obvious economic weakness that exists out there. And here's the thing: when you look at 2008, what happened first. What happened first is that the market spiked down, sure, yeah, because it had to react to the crisis. But after that, there was nothing but pain. Market went from 2.5 right back to 5, and that caused pain. That caused people in real estate to really just tap out, and that was really the bottom of the real estate market at that point. So anybody that bought then 2010 forward after June 2010, they never took a loss, never. But lately, anybody that was playing games, I want to say 2015 and on, they're being broke by this, no doubt. For example, I saw the other day the Brooklyn Tower. Hell, my freaking sister sent me this shit because I've been talking about this for years. I knew this was gonna happen because it's obvious. How are you gonna build high rises in places where there's no mode of transportation that's convenient, where the quality of life is trash, where there's no reason to live there unless you grew up there, where I mean, these buildings are like projects. I mean, I'm not even going to get into that. But the buildings that they're building nowadays, they're horribly constructed. I don't know what the fuck people are thinking. Like, I don't know. I don't know. I don't know. But I'd be remiss about any new construction ever. Fucking, you gotta be shitting me. Ain't no way. Anyway, um, so places like Jersey City, Brooklyn, Bronx, Manhattan, even. I don't Queens. Yep, Long Island City. Well, actually, Long Island City was the first one, so they might feel the pain the least. But all these other areas where it's low income, primarily that are dominant in that area, and you got high rises being built there, and the area being gentrified. Harlem comes to mind. All these places are about to go through real world of hurt. Period, because the can kicking is over, and they don't want to kick the can anymore. You get it? Because that's the important thing to understand. That's what that little piece on the chart there represents. That little blue piece, that represents that they are no longer caring to kick the can down the road. They don't have to. They don't have to. They don't need to. And the thing about it is the reason why, right? When we look at the reason why, we got to take into account that there has to be a replacement. And you guys know what that replacement is. CBDCs. So, there's a lot of different things that could work against us in the very near future. There's talk of it being ready by 2025 in the US. They're already doing it in China and Asia and other places. Because those people are just straight bend over types. They don't even care. People over here at least fight to some degree, at least some of us. But over there, that's the culture to just bend over. So whatever. They're already fucking roasted over there in Asia. Europe is already getting lambasted with that shit. They trying to sneak it in every which way possible. And it's just the same wherever they can. They're getting it in there. No questions asked. Because who are you? We're in charge. You're just some random person. And when you think like that, and you're just some random person, guess what? Your life gonna end up being just like that. Yep. And that's what we're about to see. Sad to say, but it's true. I mean, let's take the yen. Let's take a look at this thing here, for example. This currency has been under ridiculous amounts of one-way pressure since 2011. Like, I was in college still. Like, this is way back in the day. This is 15 years ago already. And what's happened over there? Literally nothing. The economy's trash. If you're an employee, you working 12 hours a day minimum. I think it's 6 hours a day or 6 days a week minimum. You don't get no days off. Like, that's not a thing over there. There's no personal time and none of that. Like, they don't do that in Japan. Japan is a whole nother beast. And this, the currency, this is what they intend to do here. It just ain't gonna look like that. And that's what I was trying to explain to you guys earlier. But now we're past that point. We're at the point where it's gonna look like that, but like this. Other way. That's what's coming to America. And that's what's gonna break it. And then once that breaks, then you'll get a leaky picture, something like that, where it just bleeds forever because nobody's gonna be using that shit. But right now, the market's addicted. It has to continuously use dollars. It has to. And there's a shortage of dollars in the sense that the people that have them are hoarding them. So if you ain't got it, you got to figure out a way to make it, right? That's why you can't go outside in the street and just see money changing hands like you used to back in the day. It's just a different world now. All of that is a function of what is happening economically and behind doors that you don't care to look behind, because I fucking found it. So why can't you? Right? And these are the things you got to ask your homies, your homettes. Why don't they care about living a shitty life? Because everybody's basically living that until we decide not to. That's pretty much how it goes. That's pretty much how it goes. And same thing as we saw in the S&P 500 we're seeing it in the Nasdaq, right? Because they basically move one and the same. And as we zoom in, we're gonna see the market is taking a distributive tone, and I was talking about this a couple weeks back, and maybe last time I streamed, whatever. But point is, you guys see it happening now, right? And the thing to understand is, this impulsive move already happened. We came, retraced, bull market again, right? Over all this time, because this is 8 candles, 8 days per candle. Hold on, guys. Yeah. Um. So it looks like we're entering. It's not the same profile, right? It's not the same type of pump. It was more vertical. So when it's more vertical, the recoil has to be more recoily. If that makes sense. Meaning for every action, there's an opposite reaction. So the motion to retrace this move should be similar, right? Unlike this one, it took a while. This one took a while to happen. This one was like whoop, right? The period of time in which it happened, like this was a bigger move that took a longer time to happen. So the drop happened kind of out of nowhere, and that's kind of what we see here because it's like whoop, right? It's like almost slip of the rug or something like that. But this one is gonna just be a rollover. You guys will see it as it develops. It should look almost like a hump. And we'll see that. We'll see it over time. Here we go. And actually, as you zoom in, you can already begin to see it, what it's going to look like on a bigger time frame because the smaller time frames replicate. And I've explained this before. Learn what fractals are. Learn how to read charts and times, and just understand that everything is a function of itself, just at a different time perspective. Right? I mean, I started at 55 days. I started at 55 days. E-mini, S&P, or the Nasdaq doesn't matter. Uh, this one is already looking super weak, but we can't even get any data that far back because it's actually that new. I'm guessing mid caps is a little older, but same deal here, right? You guys can see all these equity markets are lining up the same. And what you get when you look at China is a different picture. Maybe China isn't ready for a bull market yet, but we're definitely ready for a retracement from a 55-day perspective. But looking at these U.S. markets, they've been in a bull run since 2000 freaking eight, since 2009, excuse me. So 15-year bull run is kind of all right for it to end and get a pretty decent pullback. What if we get a pullback to 2,500? I mean, that's probably, yeah, that's a little over 50%. That's a 60% drawdown. But that's an area that would make sense because it's basically where we took off from. That's basically where this big bull market took off from back in the day, 2015. So it would make sense. But then you would have to contend with all of this, all these people. I mean, look, I remember sitting in my first internship and hearing people call in and cash out their 401ks left and right. Left and right. It was the craziest thing. And you knew they didn't want to do it, but they kind of had no choice because of their living situation. And look at what they all missed out on because they didn't understand the long term nature of the game that's being played. And a lot of people, including the crypto folk, love making that mistake. They love it. I mean, I can't believe nobody talks about farming still. I can't believe it. I mean, talk about easy money. But if you know, you know. I don't got to talk about it. I hope you people are doing what you're supposed to be doing. So here we go. Here's a nice little image. This is the S&P 21 day. right? So we started at the 55 day. We can see the beginning curvature, right? This is 34 days, this is 21 days, 13, right? And we can see it, distribution, and it looks a little wicked up here. 8 days, right? We're running it, we're even hitting a higher high at a lower speed of momentum. We're at 202. Up back here, 250s. And the numbers don't mean anything. It's just a relative measure. It doesn't matter. What matters is the shape. And that's what's important. So we went up faster. I'm sorry. We went up further, but couldn't even work up any type of momentum to get there. And that's how you know this market is about to roll. This is 8 days per candle, right? And it's understanding stuff like that. That's little basic physics. That's not really anything crazy. And then here, what are we seeing here? It looks like it tried to peak above. Okay, values. All right. Give me a second. 177. 174. Yeah. So this is like how do I explain it? It's like a surface tension thing, or it's like a tension thing. So we got relatively higher reading in terms of momentum. However, we got a significantly higher move on the chart. Like the move on the chart versus the move down here, it still qualifies as a negative divergence basically, because this is basically flat. When you look at it in terms of where they're at, 175 versus 182, that's like a 7 point difference. That's not really much. If it was like that, then it'd just be bigger divergence. But since it's like that, and you still have that price difference, then the odds are it's still gonna roll over. It's just gonna be a little nastier than you thought because of the fact that it's a hidden divergence. And I had to learn that. I didn't really know. I ended up learning that afterwards. So when you see these kind of humpback moves in the market on this indicator, what ends up happening is the market typically loses its feet. So I'm expecting some type of downdraft at some point. And I wouldn't call it a black swan or anything like that, but something to the effect where people can be like, damn, I fucked up. Because a lot of people up here just been buying free willy-nilly, all year. And this is what you see in the media. They're promoting that bull market. Even though everything with rates ain't what it ain't what they want it to be. And they're really just holding on as best as they can. The thing you guys got to understand about the rate picture and the significance is that they're going to do their best to keep you in the dark so that you don't make the right moves and you do end up selling at the lows instead of buying the lows. Right? And it's the same thing here. I mean, when we zoom in to these charts and see what's been happening. I mean, let's take a look at what happened earlier today. I mean, I really wanted to talk about this. Yes, I almost forgot, but no. Let's talk about this. So, what did I just do? There we go. So this morning there was a data release, right? And as I showed you guys earlier, the data release was at 8:30. I just want to show you guys the time again, so there's no confusion. As we all can see, 8:30 GMT -4. Okay. I am Eastern UTC -4. Same thing. Okay. Now what I'm going to show you is just proof of what I've been talking about all along. And you guys got to understand that if you don't know how the game is being played and you think it's being played fair, well, then you should just know that you're the sucker at the table. Because no games are played fair when they don't have to be. That's the whole point of crypto. That's exactly why cryptocurrency exists. And that's why so many people fail in the realm because they're too busy pretending somebody else is going to do some fucking work for them. And that's literally not how it works. So all the people that are all of a sudden better than RH and think they got shit figured out, well, let me educate y'all real quick on what you don't know about anything. Because all of those tourists, all of those people that are pretending to know crypto, this is just a hobby for them. It's not a hobby for RH. It's not a hobby for me. It's not a hobby for a lot of guys that educate in the right fashion. So let me educate you a little bit further. What do we have here? Let's see. Let me get rid of this. Yeah, let me get rid of that. I think I gotta get rid of this. Okay. So as you guys saw, 8:30. 8:30 is actually, let me drop the volume on this bad boy. Yeah. 8:30 is when the market was supposed to release the data. But what ended up happening is, if you're looking at this chart here, at 8:27, really 8:26, there was a beginning to uptick in volume, buying volume. And that immediately sent the market up 10 points. And we're just talking about the NASDAQ. 10 points isn't much in the NASDAQ. But this is not a time-based chart. This is 8 ticks per candle. I don't do anything based on time-based charts. That shit don't matter. What matters is what price is doing right now. Is it moving? Is it not? Because that's how you know to actually participate in the market. Pro tip. Anyway, so as you guys can see, the market got moved, right? A little bit before. All right, we come back, we see it's settled again. 828, 829, right? 829.39, 829.43, 829.46, 829.47. At that time, price was 18,393. Okay, 8 minutes, 29 seconds, 47 seconds. Or 29 minutes, 47 seconds. Then, a split second later, 8 minutes, 29 seconds, or I'm sorry, 8 hours, 8 a.m. Basically, at 8 a.m. with 29 minutes and 47 seconds, the market jumped 50 points from 393 to 447. 55 points, 54, whatever. This is before 8:30. So whoever was short the market got fucked. Whoever was long the market and got out, they won. Because it didn't stay that way, as we all know now, right? We see it's definitely not 18,400 anything. It's 18,170. So, we'll keep going. 8 at 8 a.m., 29 minutes, 47 seconds. That was the price, 18,440. 48 seconds, few points up. Then, same second, it is down 20 points. Within that same second, it is up again 10 points. Within the next second is in the same range, and then it drops 10 points. Within that same second, 29 minutes with 49 seconds now. And then we jump up 5 points. And this is all before 8:30. The number hasn't hit. The number has not been released. $829.49. Still same price range. $829.50. Same price range. $18,440. Boom. $1829.50. We jump. $18,472. 50-point total jump. I'm sorry, 80-point total jump from in 3 seconds from 393 to 474. That's 80 points in 3 seconds. That's the NASDAQ for you today. And then from there, that was the high of the day. From there is all smoke. All smoke. And this 108 level has been really holding the market down, basically. So the day up until one point when it went into the 60s, but then price recovered, and we are now back swiftly above the 108 level. So this 108 level seems to be pretty significant to the market to some degree, because yeah, they're not letting it go. But that's just the E-mini. Let's look at what the S&P or the Nasdaq. Let's look at what the S&P did. I can look. Oops. Let's see what kind of fuckery went on over there. Because I wasn't even looking at this one. I was only looking at the NASDAQ. So I saw it when it happened. But that's a good example of what happens in the stock market that you wouldn't think happens, because who's telling you? Nobody. But yeah, it happens. Manipulation is a function of our society, because you don't hear anybody saying anything about this. Nobody cares. It's all fair. It's all fine and well because it didn't happen to them. That's the thought process. So here we go. 828. Right, we're trading at, what's this price level? 52.68. Let's just call it 52.67. Okay, 52.67 right here. Okay, 829. 829.30. We're at 52.68 and a half. By 829.45, we're still in the same range. 829.46, still in the same range. We finally break 69s at 47. So we're basically about to jump 15 points in the S&P, which is a lot, in the same second. Watch. So from 829.47 to 829.47, we went from 5268.75 to 5284.75 with a high at 5285. 15-point jump, split second. Within that same second, we went back down 5 points. Then to the next split second, dropped 10 points, another 5 points from the previous. Then the next tick was up 3 points. I mean, these points sound like a little bit, but in the S&P, 3 points is a lot. 1 point, not so much. But by the time we get to 829.49, on the back half, we're back at 52.80 and 49 again. We are back at 78. And by the time we get to 50, we are back at 83. I mean, but we don't recover. That's pretty much it. And this all happened before the number was released at 8:30. I mean, 8:30. What the hell is the price? We still don't even know. I don't even think I ever got to the price on the other side. Let's see here. By the time you get an 8:30 tick, the price is back down to 52.70 from 52.85. At the first tick at 8:30 is 5272 spot 50, and that's after a high of 85. I mean, this is the stock market. This is the legal shit. This is the shit that nobody should be saying nothing about. But guess what? The fuckery happens everywhere. All of this happened in a split second, in 10 seconds time. And it's apparently legal. stop run, then a shove down, right? Because what this is a stop run. All these orders here got cleared out because the market's been looking short. Right? So it ends up becoming an outside day because you got people taking shorts off this, right? You got people taking shorts off this image. And if they don't understand price action, they're not going to know that they should be closer up to here, which is the low of this candle. And it crosses over into this candle, which is a crazy ass candle, instead of taking it off of these three, which is what the people today learned when they got their clean, their clock clean, when prices went above 75. Because yesterday's high was 74 and a quarter. And all those people got swept out and carried in the stretcher, and the market's still down here, below yesterday's low. And that's why you gotta be street smart, even when it comes to these markets. So all those people selling Hex, Pulse Chain, Pulse X, Inc., all the good shit, the only real crypto, as I've been saying since I started streaming, and that's clearly been the case, all of the people selling it, they're doing us a favor. If you're watching this stream, you know exactly what I mean. Let the buffoons stay buffoons. Do yourselves a favor and get your money up. Find ways to make additional income to acquire as much crypto as possible, because the only thing we know is that the dollar is going one way, and it ain't up. So, do what you got to do. Hustle how you got to hustle. But excuses are for weak ass motherfuckers. Don't know nothing about that. And we don't do that over here, as the meme goes. So while markets continue to make new lows, because that's basically what's happening. I mean, look at this. This happened during the stream. I saw it at 12:30. I mean, this is insane. This is insane price action. This is shorts covering right here. And I don't really like looking. Yeah, this is much better. So, let's look at the bonds. Let's see if the bonds had any fuckery today. Let's see. Looks like a no-go. Looks like no fuck. Oh, nope. Just people that need the number. This is regular. That's fine. So here's the thing with manipulation that you got to understand. As long as the market, and what I mean is in terms of acceptability, if you're a player in the game, right? Because people are always going to have more money than you. You can't beat that. How you gonna compete with that? You technically can't, unless you just hit the jackpot. And then even then, somebody's gonna have more money than you still. So at the end of the day, you got to understand that people are going to be able to do what they want in the game that you're playing. So you got to learn what's acceptable and what's not. And really it all boils down to, does it affect me or does it not? So that's kind of what I mean. So if you're looking at these timestamps, right, the volume increased at 828.48, 828.49. Or excuse me, 829.48 and 50 by the ticks that you're seeing here. By the time we get to 8:30, that's the only other volume increase you see. So the point is, since the volume increase was with the market, does it really seem like manipulation? Doesn't really look like it, does it? Whereas what we were just looking at in the E-mini, NASDAQ and the S&P, that shit clearly was manipulation. Because they took out all those stops and all them people just got wiped out. Whereas the bonds, I mean, if you wasn't short, well, I don't know what you was thinking. Because that was the only way it could go. Right? And we talked about this Sunday, in fact, when the market opened. I explained how the market was going to continue lower, blah, 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 and this is why, and da, 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 and look at what happened. Boom, because that's just the way it goes. Prices don't do things for the hell of it. They do it because that's what they do. Yeah, this was the open. Oh no, what was it? This one? Yeah, Friday to Sunday. Or where is it? Is it this one? Yep, here we go. And it was just indicative, right? It didn't hold the price action down, but it sure as hell said what was coming, and it came. And it gave you ample opportunity to get involved. So these are things you guys got to understand. I mean, look, if you're not involved in regular capital markets, man, you're doing it wrong. I'm telling y'all. The amount of money that people leave on the table fucking around with crypto is just laughable when there's all this money to be picked up elsewhere. So, you know, Google it. But look at that. Ooh wee. These folks ain't playing fair, man. They ain't playing fair. And the thing to understand is that the market is gonna move where it's gonna move. You gotta be in tune with what the market is doing. The market don't gotta be in tune with you. So you guys take that, write that, keep that. I really, really want people to win, but you gotta do the right things to win. If you're out here doing what everybody else is doing, Robin Hood and stuff like that, you're not gonna win. You're not. So, learn how to read the market, take the clues, take the cues that I give, Google stuff, man. Understand how you learn. Do yourself the favor. Like, nobody can force you to make money. Only you can force you to make money. And I don't think people really get that. So, you know what I mean? As you guys can see again, these points of control, they do things to the market. I'm telling y'all pay attention. You learn some shit. Learn some shit from whales, you know what I'm saying? Do something. But I don't know. I don't see. Let me see if I got any videos that are worth sharing today. I kind of didn't even want to go there. Yes, there is one. I'll save it to the end. Shout out to my man Jay Everything. I got a new track to play that he made. I thought it was hot. The man had to hear it a few times. I don't even know. I don't know how you don't like your own shit, but it happens, I guess. I don't like hearing my streams, so I guess it's something like that. Um, yeah, it's crazy out here, but the internet, man. Let me. Nah, you know what? I'm gonna play this one about Ross Perot because I thought that was interesting because I remember hearing all Ross Perot. When I think about Ross Perot, I think about Donald Trump because they treated him the exact same way. The exact same way because he came in with his own money and all of that shit. I don't know if you guys even remember, but I was a kid and I remember. I don't know why, but I just found it weird and I remember. So I'm gonna share this now. Let's see here.
Listen very carefully to this, because this is coming to Washington to cash in and then go get a several $100,000 a year job as a foreign lobbyist and use your influence in the White House and Congress to ship not only jobs overseas, whole industries overseas. Here we go. Between 1980 and 1985, 76 former federal officials left office to become registered foreign agents. Now, this will break your heart. This is like a general switching armies in the middle of a war. They should come to serve and go home, not cash in. We got 35-year-old boys that have trouble holding a minimum wage job. They don't have any skills. All they've done is run around and, serve as a senior official in Washington. They're making $200,000 or $300,000 a year because they got his ear. Now, even worse, and I hope you will put your foot down and make both parties throw the cards on the table. They've got these people on leaves of absence now working on presidential campaigns. Foreign lobbyists on leaves of absence working on presidential campaigns. That's like having Russian spies in the middle of a presidential campaign during the Cold War, because we're in a business war now, folks. Go down the list. 8 special assistants to the president.
Business war. Never changed.
The United States. 5 assistants to the President of the United States. 2 deputy assistants to the President of the United States, 1 President's counselor, 1 deputy White House press secretary, 1 chief of staff to the Vice President of the United States, 2 U.S. trade representatives, 6 senators, 9 members of the House of Representatives, 12 senior Senate staff members, 5 senior House staff members, 4 retired generals, the chairman and the vice chairman of the U.S. International Trade Commission. The sickest thing of all, we had a key guy on the Trade Commission leave and go to the other side in the middle of the negotiation. He knew the plans, the strategy, the details. As far as I'm concerned, that's economic treason. If we get there, we're going to clean this mess up on day one. I don't have to tell all of you.
Well, guess what? They accomplished the mission, folks. Right? We've seen it. And now we're going to go out with this. And shout out to the man Jay, everything on the cut. Appreciate that, bro. We're gonna rock out with this, and we're gonna wrap it up with this. So thank you guys for tuning in. Appreciate y'all as always. And as always, do your damnedest to learn and keep elevating the knowledge base. Otherwise, you're just gonna stay stuck in place. Peace.
Yeah. Yo, already said it from the beginning, he did it. His galaxy mind designed something so fine, it will have all of us winning by supporting it and giving it just a little bit of time. I went along with it, fast forwarding it, got me thinking of resign. After every dip back on the rise, all by design. Everybody gotta eat, and we got a lot of meat on the bone left for them little guys. Very cautious, hesitate to take it small steps at a time. Don't wanna be on a shitty end, relive 2017 again. Grandson and daughter gonna be part of the 1%. Grandfather done bought the dip, dry powder found around him. Sold some of grandma's shit, jewelry I knew she wouldn't miss. You witnessing the greatest wealth transfer of the millennium, only a fool surrounded by winners. No defeatist attitude within us. Attitude and gratitude is a must. PLSX, PLS Hex, all that I trust. Hex Flex, PLS Dex, just swap it up. T-shares been about enough. No middleman, D, I got a suck. You ain't aware of Richard Hart. Pretty clear, you ain't got a post. Join in, you can win by default. Surrounded by winners anytime. Be many of my friends out at Hex, not at Vex. That I'm no longer around them. Wishing that they listen instead of bitching on the founder. Daily pay, make it rain every day like I'm living in the shower. They ain't getting it today, then let them get it at $1. Real winners in the game be the same holders in the founders. Stake it and put it away, gratification when the time comes. Stake and let it make the waiting better. Never early end staking ever. Hex scam me out of poverty. Now the bank tell a smile at me like I'm cashing out a lottery. Wondering how I be periodically passing the green light, buying property. Used to be the guy without the cheese, now I be the guy that try to be. Failed to see the signs I can see. Finally living a dream I only could vividly see. While I live on winners, no defeatist attitude within us. Attitude and gratitude is a must. PLSX, PLS Hex, all that I trust. Hex Flex, PLS Dex, just swap it up. Winners, no defeatist attitude within us. Attitude and gratitude is a must. PLSX, PLS Hex, all that I trust. Hex Flex, PLS Dex, just swap it up. Winners, no defeatist attitude within us. Attitude and gratitude is a must. PLSX, PLS Hex, all that I trust. Hex Flex, PLS Dex, just swap it up.